Kuski with the Mid-Michigan Innovation Center. We're excited to see you join us this evening. We have this panel running twice this evening, from now till 5 and then from 5 to 6. And paralleling this, we have a workshop on going to market, sales and marketing, with some really experienced entrepreneurs that two of which we've invested in. We're very proud of their performance. So hopefully you can join us and then attend that section. We really have a distinguished and exciting panel that reflects well on some of the resources in the state, and I think can speak to many of the issues that we find most pressing with our clients. Consistently, year after year, when we ask our clients what their most pressing needs are that we can be supportive in, it's access to capital, number one, by a long gap. So we spoke a little about this in a workshop previously on term sheets, but the key premise of that message was that access to capital is approaching a crisis level for startups. It fell off the cliff when we lost a lot of home equity, which was the primary source for family, friends, and fool rounds. So we're going to look at some of the other sources, but to do that I want to introduce our panelists. Skip Sims from Ann Arbor Spark, Jack Ahrens with TCAP Ventures, and Andy Domanowski. Did I say it right this time?
Domanowski.
Andy's so much easier.
Yes, it is.
With Chemical Bank. So you can make banker jokes, you can make VC jokes. But no lawyers on the panel, right?
No.
So, okay.
But there are some in the audience.
Oh, okay. But really, quite a distinguished group. I'm going to let them each tell you a little bit about their backgrounds to get started. Skip, you want to?
All right. I've been with Ann Arbor Spark from the beginning. It was created in 2005. I actually started in January of 2006. I was the second employee. Spark is a public-private, not-for-profit economic development organization. But where we differ from traditional economic development groups is that we spend an awful lot of our time. In fact, the majority of our staff and our resources is aimed at entrepreneurs and early-stage businesses that aren't up and running and profitable yet. We provide educational programs, et cetera, to get entrepreneurs from where they're at, from idea to actually forming a business, what kind of business, help them find talent, co-partners, et cetera, help them find investors, capital, and then another part of our organization, though, also serves the larger companies, including Fortune 500 companies, as they expand, grow, and look to hopefully do that in the Ann Arbor region, and that's what our stakeholders pay us to do for the most part. Now, having said that, though, we also manage for the state several programs that are funded by the state and are programs available to entrepreneurs, early stage businesses, no matter where you're located in the state. So if you're in Midland, you're in Fort Huron, you're in Houghton, you're eligible for these programs. Spark just happens to be the place where it's housed and where it's administered. I started, like I said, in '06, and my focus was on, first of all, the educational programs that we did. You may have heard about our boot camp. It's been around since '03 or '04. We do that twice a year, and it's for really early stage startup companies, and we give them a crash course in 2 days on what they're getting themselves into. And we actually consider it a success, our boot camp, when we lose a couple, because they say, whoa, this is not what I thought I was getting into, no thanks. And that's a good thing. We just saved them a lot of time, and probably money and aggravation. Then one of the things we did, though, and what we're really here to talk about at this session today, is we applied in collaboration with all the smart zones in the state, of which you have a smart zone here in Midland. We asked for the state, through the 21st Century Jobs Fund program, a pre-seed, what we're calling a pre-seed fund, which is a co-investment fund, and I can give you more details than that in a moment. We just received in last year, 2011, our 4th grant for the exact same program. The program has not been modified significantly. And so that was validation, we think, that we've been granted 4 times now, and those grants have totaled $25 million, and so we must be doing something right. We're happy to share that with you more as we go along.
Great. Thanks for coming, Steve. Jack?
Hi, I'm Jack Ahrens. I'm the founder of TGAP Venture Capital Fund out of Kalamazoo. I've been in the venture business since the late 70s. Ran an SBIC regulated fund in Rockford, Illinois for 5 years. I was up in Minneapolis for 20-some years. And then I ended up coming down here and starting a venture fund with a guy that I had backed that started a company in Michigan. We invest, we're on our second fund now, investing in companies. We're structured as limited partnerships like most venture funds are. Our investors are scattered all over, so we've got them from Michigan, Florida, Wisconsin, Illinois, California, Nebraska. We invest in predominantly technology related. As it turns out, out of both funds, most of our investments have been in the medical device area. We like that space. We try to stay in the Midwest. We've had 2 deals in Michigan, one that we sold a number of years ago, and then one that we're currently in right now out of Ann Arbor. I've got 5 deals in Minneapolis, a couple in Chicago, 1 in New York, 2 in California, and 1 in Arizona. Our biggest hit from this fund was a company called MinuteClinic that we were the original institutional investor in, and we sold that to CVS, and they were the ones that started the whole retail-based, nurse practitioner in a drugstore or grocery store. And we started that whole industry, and then CVS ended up buying our company. We've invested in 14 companies out of the 2 funds so far, and we're about halfway through the investment cycle of our second fund.
Andy?
Good afternoon, my name is Andy Dominowski. I'm with Chemical Bank here in Midland. I've been in the banking industry for just about 25 years. Only the last 2 years here in Midland. I was in Saginaw for the prior 23 years. One big distinction, I work for a bank, we're a lender, we're not a venture capital or an angel investor, so we don't take ownership interest, so we are a lender. So we're going to look at cash flow, collateral, guarantees, to get our loan repaid, because we don't have the recourse and we don't want to take ownership in any assets, because the only time we take ownership in assets is through foreclosure, and we don't want to do that because we certainly aren't good at doing that. Now that said, we're kind of at the tail end of the access to capital stream because of those restrictions, but there are programs through the MEDC, Michigan Economic Development Corporation, through the SBA, and other local EDCs that do allow banks to do maybe a riskier loan for a venture that's maybe in the startup stage or they're just past the startup stage. So there are opportunities for lending. It's a matter of sitting down and speaking with someone and getting understanding of what your program is, what your plans are, where your capital is and coming from, and what your collateral and cash flow are going to look like. So it's not to say that we're not a player in this. I think the banks can be. Certainly, as Ken mentioned earlier, that the early stage money from home equities has been hampered, not by any fault of, I guess, banks in today's world, but more so from valuation of real estate and things of that nature. But depending on where you live, we've seen some stabilization in that, and there are still opportunities to do that. Interest rates are at historical lows, so it's as good a time as ever to be a borrower. It's just getting the rest of the ducks in a row to qualify for a lending, a loan relationship.
Let me throw one out to start with, a warm-up pitch, I guess. I began with some comments on how devastated the seed capital market is. The macro data seems to suggest that family, friends, and fools took money out of home equity. Second mortgages, loan guarantees backed by home equity. With that gone, these companies are struggling with sort of going second stage without ever having pre-seed money. What would you tell, I think all of you are seeing a new stream of applicants for funding. What do you tell them? How can you help them?
Well, the good news is, in the state of Michigan, one, you've got a lot of assistance from the state in terms of public support, unlike any other state in the union, in my view. I'm not familiar with every single program in every single state, but I think when you look at it collectively, what the state of Michigan is offering you through the various smart zones and all of the other programs that exist in our ecosystem, you've got resources that are public supported that nobody else has around the country. And so in that regard, you're fortunate to have a Mid-Michigan Innovation Center, and you're fortunate to have a Smart Zone here if you're in the Midland area. And having the assistance that they provide that you don't have to pay for. An awful lot of that is in fact free. We provide, I know at Spark, and I suspect you're very similar, if not identical. What the Smart Zone legislation allowed communities to do was set up a TIF district to capture, and we collect some, we have revenue every year that supports our programs where we can engage with an entrepreneur with a concept that's a little bit further along. It's beyond just an idea on paper. But if we can be convinced, you know, that there's activity there, we can provide you services and it doesn't cost you anything. When it gets to the capital, we expect that return, but nonetheless, you know, it's not easy capital necessarily, but at least it's there. And I think the angel community around the state of Michigan is growing fairly rapidly. I'm seeing a lot in the last 18 months particularly, that the angel community is starting to come alive. And we're actually developing now, growing rapidly.
Jan, what do you think?
Well, I think, you know, it is tough to get early stage, and I think that what, you know, we tell everybody is you just gotta get a little bit more creative. And there's a lot of things you can do to help. You know, Angels is the first place, you know, to go to, but, you know, you can do creative things with potentially vendors, or future customers, getting them to either prepay or give you extended terms if it's a vendor. So just, you know, you have to start getting a lot more creative than you used to. You know, there's the traditional sources of, you know, which we like to see all entrepreneurs that are really committed to the, you know, to the business. So we want you, you know, committed financially too. We don't want to see you where you're up to your eyeballs in debt to get the company started, because that's more of a, but, you know, just look at all your different sources and figure out, I mean, you know, everybody's trying to, you know, make it go here. And so your vendors, they're probably struggling too. And so they may be willing to try to work with you just to get your business. And you may have to sign a longer term agreement to stick with them if they help you, but it can help you get over the hump early.
Andy?
From our perspective, and to the extent that individuals were accessing home equities and the such for pre-seed capital, that is a problem. Obviously, if you were doing that, it was based on the value of the home, so you had collateral. Cash flow still may be there, but you don't have collateral in many instances, and there really is no quick fix to that dilemma until property values start to rebound somewhat. What banks have done in the commercial world, or in the world for commercial finance, is certainly leveraged their relationship and opportunities with the SBA. SBA lending is probably at an all-time high in today's environment. And then there's also programs through the MEDC that will help with, they have the collateral support program. They also have a participation program that does assist with some of the needs, especially if there's cash flow existing and it's just a collateral issue. There are some creative ways to get around that, but it does pose a challenge that may not be hurdled over. It depends on what the situation is. You really have to look at and investigate all the alternatives.
Are we doing a very good job matching up sources of capital? The banks can come in for debt if and only if we have some collateral and some equity. Are you seeing equity, you know, are you seeing an angel round bringing in debt as part of the angel round? Or are you seeing the VCs, are you bringing in debt and working with the banks to leverage our equity positions? Does anybody do
We
that?
don't do debt deals.
You don't try to bring debt on top of your equity?
Oh, not, you mean from ourselves or from outside sources?
From outside
Oh,
sources.
you know, from outside sources, we will try to work with them, but so often the companies that we're in are very early stage medical deals, and, you know, we're not even through the FDA process, and so there's, you know, no bank is gonna touch them.
Yeah.
And from our perspective, we'd rather see, instead of layering debt on, we'd rather see it be capital. And some of the guarantee programs, for instance, like the USDA, is going to have a capital requirement. So where maybe an angel investor comes in with a potential convertible note or something, the USDA is going to probably require that to be converted to capital, because we don't want to, they don't want to see they have an equity requirement. And so we don't like to see that debt layered on.
I think many of you probably are struggling with some of your own issues. And one of the things I want to make sure is, you know, I've got loaded questions for them, but the best questions are the questions all of you have. So we've got a bank, a venture capitalist, and a lead angel in the state on the panel. Do you have some specific questions? Anybody want to break the ice with? Yeah.
Question for Skip. Skip, I know you see a lot of business plans, you talk to a lot of investors. What do you think is the three, biggest mistakes that young entrepreneurs looking for seed funding make, based on your experience?
Sometimes they'll start looking for capital before they're really ready to start looking for capital. They'll actually go and try and engage investors and actually embarrass themselves. Sometimes they don't even know they did. If you're really early, that can be a mistake, because sometimes those types of investors have long memories and they don't necessarily give you a second chance. And so you don't want to blow that good first impression.
And how would you define too early? Like what's too early?
Well, part of it depends on who you're asking, because, having said that, there are a few people that would like to see it at the very earliest stages, and they'll tell you no initially, rightfully so, and then they'll say, though, we'll continue to watch your activity, and maybe a year later, you might have progressed enough. Or they'll be intrigued, say, okay, I saw you a year ago and you said this. How much of that did you actually accomplish? And then where you really shot yourself in the foot again is if you didn't achieve those things. So so I guess that would be mistake number 2 that entrepreneurs make fairly common, is that they overpromise. Overpromise, underdeliver. It's a classic, almost everybody does it. It's scary how often that happens. You're number 1. That's a real issue. And so we always, as part of our just overall educational, just advice giving, et cetera, is never, ever put a milestone out there and put in paper that you're going to do something that you're not 200% convinced you're going to be able to achieve in the time frame you say you're going to do it. Because that'll come back and bite you big time every time.
Yeah, and it's not so much having long memories, which we do, but it's the other thing is it just screws up all of your planning, which, people just don't understand. And there's no sense in kidding yourself with ridiculous projections you can't make to make the business look good. Because if you raise money on that, you're not going to have raised enough money, and you're going to come up short, and that's really deadly. And I agree with Skip's first point, but I would change it a little bit, as far as entrepreneurs going out looking for money too early. It's really more before they're ready. I'm not sure I've ever seen a guy come out looking for money too early. They always wait till the very last minute thinking they're going to get their money in a week, and it doesn't happen that way. You got to figure it's going to take you 6 months to raise money, and so you got to build that in, and then before that, you got to do what Skip was referring to, is get ready, get your ducks in a row to go out and raise it.
Andy, do you want to take a shot at that one too?
Well, from my perspective, I agree. The other thing I would add is you can have your numbers in order, but be prepared in an interview process. You got to be able to articulate what you're doing, and if an angel investor or a VC or even a banker asks you a question, you want to be able to answer the question. This is your business, your product, your service. Who better to be the expert in it than yourself? And I go to, you ever seen the television show Shark Tank on TV? While it's dramatized somewhat for television, you can see that the people who are successful are the ones that can articulate and explain what it is that they're trying to do, what they've done to that point, and where they think they're going. They know it. The ones that they pounce on are the ones that get asked a question and people circle around with their answers and they don't understand what they're trying to do. So it's just practice if you have to. Take opportunities to go to functions like this and run your ideas past people so you can get comfortable talking with people face to face and in situations that maybe otherwise you'd be uncomfortable in. Because after all, you're the expert.
Thank you.
Yeah, go ahead.
So my question's for Dad. So define ready.
Ready as far as being prepared, you mean?
Well, prepared to go to an investor.
you have to have a good understanding of the financial aspects of the business, how much you're gonna need. I mean, if you come into me and say you need $1 million and you don't have some financial projections, written down, you've thought through them, you're gonna lose all credibility immediately, right? So, really understand what it's gonna cost you to go to the market and be able to present that. You wanna have something in the neighborhood of a 3, maximum 5-page executive summary, to present to somebody. We have very short attention spans, so, don't come in with a, 15-page, executive summary. We probably won't get through it. So you want to articulate really what the product is, what the pain is that you're trying to solve in the marketplace, how you're going to sell it, how you're going to make money, and then, what the management team is. And we don't expect the management team to be filled out. I mean, I've never invested in a full team yet. But at least, we want to know where you think your strengths are and what you think the holes are and what the people are going to look like that you want to try to hire. And that's one of the things that we think we bring to the table is working with you and hiring those people. So
If you don't know what you want, you're not ready.
Yeah.
Or what you need. I mean,
Yeah, what you
on
need
that
is-
same line, I've had a lot of potential borrowers ask for a loan, and I'll ask them, well, what do you need? Well, I don't know, what do I qualify for? Well,
You're not buying a car.
Yeah, you have to be able to tell me with a certain amount of accuracy what it is that you need, which means then you have to do your projections. You have to plan out. It's going to be a what if, and you understand that. But if you don't at least have a basis for the what if, then you have no basis for what you're asking for. In venture capital, I'm sure an angel investor is the same way. If you don't know what it is that you need, it's very difficult for us to help you get to that end. We can analyze it, but we're not there every day living it.
But Andy, from or for all of you, from the company side, we need all we can get. So how do they, I mean, that's I think it's sort of the thinking, it's like, so which ones can I qualify for? I need as much as I can get here. So how do you, if they're trying to tell that
Okay.
story, what do you tell them?
What you need as much as you can get, and that's not necessarily true. You need what you need. You need money for permanent working capital. You're going to need money for maybe seed money. From my point of view, from a banker's point of view, you're going to need money for permanent working capital, capital assets, and generally short-term working capital to carry your working assets. You should be able to identify what those needs are. I need this piece of equipment, this piece of equipment, this piece of equipment. I need it for these reasons. Here's my return on investment. Here's how I'm going to repay that loan. With this equipment, I'm going to make this product, and with this product, I'm going to incur this in receivables. I'm going to need this in inventory, and so therefore, I'm going to need a line of credit to carry X amount because I know I got to pay for my stuff in 30 days, but I'm not going to get paid for 60 days. You can map it out with spreadsheets and figure out what your high water and low water potential needs are. So that's what I mean by being prepared and being ready. If you don't know, I mean, yeah, the market might explode on you, but you can't plan for every contingency. You have to plan for what you believe might be a realistic contingency. You know,
So what was interesting though, Ken, too, is you just heard from a banker, and they are really upstream from most of you. I mean, they're only interested when you start making money. When you get to that point, you say, well, the bank's only willing to loan me money when I don't need it, and that's not true. They serve a very valuable function. But everything Andy said in terms of his criteria is the same even for an angel investor. Before you have revenue, before you have a customer. I mean, all those things he just articulated, we're looking forward to.
I wanted to play on something you said at the beginning, Skip. You said Michigan has all these phenomenal support programs, and I agree. Yet, I want to hear sort of, if that's true, why aren't we seeing more money flow? The banks are flush with money. You know, why aren't we seeing more VC money, angel money? Why aren't we seeing more investing going on in the state? What's the drag? You know, I have friends I talk to on both coasts, and they say money's mobile. We'll go where the good deals are, and they're not coming here. Where's the disconnect?
Well, the biggest, from my standpoint as an outsider moving down here, and I came out of Minneapolis, which has a very active entrepreneurial community, and It's only been in the last few years that we've really started to see the entrepreneurial spark start to take place in Michigan. Huh? Yeah.
The spark, okay.
That's $5. But, Michigan for a long time, we had guys, people who were interested in starting companies, but they weren't risk takers, they weren't really true entrepreneurs. Most of the people that were trying to start companies were somebody that was out of work and they needed a job. You're starting now, I think, to see, with all the various programs that have been going on, people that are actually, quitting jobs and going out because they want to start a company. And that's a very dramatic change. But it doesn't happen overnight, and it's going to take a while to get, those wheels rolling. But I think it's heading in that direction. I would imagine you're seeing a lot better deal flow. I'm chairman of the Great Lakes Entrepreneurs Quest. We run 2 business plan competitions a year. I've been doing that since '02, and the quality of the deals generally has gone up dramatically. And we're really starting to see things that could be potentially companies rather than science projects. And so I think things are moving in that direction. It's just it's going to take a few more years.
Yeah, Jim?
I wanted to follow up on what you were talking about with the Michigan Pre-Seed Fund. It's my understanding that if you have any sales whatsoever, you cannot apply for a Michigan Pre-Seed Fund loan. Is
No,
that
not
accurate?
true.
That's
Not
not
true.
accurate?
Not true.
Okay.
You can have up to $1 million. We use $1 million 2 ways as a definition where you cross from pre-seed stage to seed stage.
Okay.
We discovered about 1.5 years in, we needed to clearly define where you cross the line. And we did it this way. If you have raised more than $1 million of third-party outside capital,
Okay,
so we don't count grants in that number, we don't count your own money in that number. It's got to be third-party outside. If you've raised more than $1 million cumulatively, then by our definition, you have now evolved into the seed stage and not eligible.
yeah,
On the sales side, it's basically the same thing. As long as your trailing 12-month sales are no more than $1 million,
okay.
you're still in the pre-seed stage.
Oh,
So you're still going for it. But as soon as you've got that $1,001 in sales, congratulations, you're in the seed
oh,
stage
no,
now.
Now, there's the pre-seed where you do an investor match, but you also have a direct loan.
Yeah, we created, the state came back to us and said, well, wait a minute, there's a lot of entrepreneurs out there that really can't raise that matching capital that we required for the core program, and who maybe aren't quite, they haven't achieved that last milestone that the investors are looking for before they actually invest. And so we created a loan program for that stage business. You can borrow up to $50,000.
Yep.
But to Andy's point, the mistake we made originally was that the entrepreneurs in Michigan are smart and they all asked for $50,000. And we said time out. We blew through $1 million in 9 months with that loan program when we first came out in 2009. When the grant was renewed with another $2 million, we said, wait a minute, this writing a $50,000 loan all at once, that's going to be unusual. And so you can ask for 50, but our reviewers are going to come back and say, wait a minute, given what we've seen in your business plan and your pro forma, we think 25 is prudent. And we expect that loan money to be used for this, as you've articulated it. And once you've achieved that, then come back, you can ask for another 25 or whatever the number is. But, and it's a loan.
Yeah,
What's your timeframe? When somebody needs to get that, what's the timeframe?
Yeah, we get asked that a lot, and we don't have a good answer. A lot of it, though, depends on you. A lot of it depends on you and the smart zone you're working with. And I will say that Ken and Chris do an awesome job here for the entrepreneurs that work through MMIC, in that when we see, when the business plan, your pro forma, your resume, your matching documents, whatever the things are that we require, when they finally hit our desks, we do one last kind of look through to see if there are any obvious holes that might cause you to get rejected or turned down, incomplete completeness in a plan or a pro forma. If there are holes, we will come back to you and the Smart Zone and say, wait a minute, this is, here's a couple of missing pieces. So go back and spruce up the business plan. And that can take, but now the ball's back in your court, and that could take you a day, that could take you 2 weeks. I've seen it drag out for a month before we get back. So it depends on when you start the clock. Once we're comfortable at Spark with the fact that, okay, it's good, and then it goes off to the reviewers, that usually takes about a month to get a decision.
Yeah.
Jack, this is sort of a follow-up to a conversation you and I had a couple months ago. If I'm looking to raise $500,000, I know that's very much in the angel range, and that's what the angel groups are very comfortable with. If I'm looking to raise $5 million, that's the sort of thing that your fund is set up to do, is very comfortable with. What recommendation do you guys have for companies that are looking to raise something between that $500,000 and $5 million? It sort of feels like a desert or no man's land in there.
It is a tough area for a variety of reasons. Weaver's got the same problem. He's sitting here grinning. Because the problem that we've got as venture capitalists is that we can only invest in so many companies in our portfolio, and we've got a pool of money that we have to put out, and we can't go over a certain amount in each, in any one company. So, like in our case, our max is $3.5 million per company, but if we end up investing in a company that only needs $500,000, that leaves me $3 million of uninvested money that I can't put to work anywhere else, so I can't get a return on. That's what's the killer for venture capital. So you've either got to go to like the accelerator funds that they've set up here in the state that are smaller and are committed to just working in Michigan, so they can do more deals than we can. Angels, the networks are getting bigger and bigger, so you can get a little bit more money out of the angel network than you used to be able to. And now not only are the angels getting together in each locality as a network, but they're starting to work together, like Ken works with the Grand Angels and some of the others. So you can start moving up the food chain. You still probably can't get over 2 million, but you could probably at least take it from the $500,000 up to 2 million with a little bit of work. 3?
Well, I was going to add, when you're done, I was going to add a comment.
But it's a tough spot, and it's driven by economics from our standpoint, and so then you got to get creative. And there are some venture capitalists, and I was mentioning in a meeting we had earlier that we are starting to work more and more with the angel groups too. So if it gets large enough to where you can get a VC in there, and we look at more what it's going to take down the road. It's not so much this financing, because we average 5 to 6 rounds per company. So if I know that I'm ultimately going to be, I never write a check for $3.5 million, even though that's our target per company. But if it looks like I can get to that, we go in on a much smaller basis.
I want to sort of fuel that discussion with, you knew I was going to get into crowdfunding or something. So, July 4th, the SEC owes us rulemaking on open solicitation for accredited investors. So instead of going to an angel club where I touch one and they can touch the others and it's not solicitation, in theory, I should be able to put on my company's website, we want money, and solicit. And as long as I only take money from accredited investors, that's basically the language of the new 506 exemption rules. It's hard for me to believe the SEC is going to go along with it. But two, what do you think that's going to do to this whole angel space, and how do you see that playing? I mean, what do you think this is going to look like in a year or two?
I've got a little different opinion than you do on that.
I know,
it seems like an odd thing. I mean, I couldn't do it myself. I mean, to just see somebody put something up on their Facebook page that they're trying to raise money, I'm not going to write a check. But there are some aspects to it where you can, if you're pre-selling a service or something like that, it looks like, we were talking earlier about the wine business, that, if I was giving them, $500 for, 10 bottles of wine over the next year, that I might consider, rather than just trying to invest $500 in their vineyard.
What if I make a consumer disposable diagnostic for breast cancer? I hope to make it. It's got to go through some some approvals with the federal government, which is gonna be costing that. But couldn't I get a lot of investors that have some passion for that issue, that might be willing to put 5,000 in it? And, could I raise a couple million that way? I mean, do you think that's gonna happen?
I don't understand it, but
It's what I could.
I think you probably can. I mean, history says that yes, you can do that. I mean, there's been a number of other deals crowdfunded that
Crazier than.
I never
The
would
real
have thought would
question,
have
though,
happened.
to Jack, if a company were successful doing what Ken said, and there was 40 guys in there at $5,000 apiece, would you as a venture capitalist want to follow on because of that crazy mess that they have at the early stage?
And that becomes the long-term game and a problem. And this gets back to some of the discussions that we were having in the earlier session about companies that are, start out as LLCs. It's easier to get started. There's some advantages to the entrepreneur to do that. But 99% of the venture investors won't invest in an LLC. And so you have to change that before you do an institutional round. And the more people you have as part of that LLC, the bigger the problem it is and more difficult it is to change.
Due to the SEC rules, though, that aren't articulated yet, and and the SEC is dragging their feet because the SEC was not for this legislation. They hate it, and they hate having to draft these rules. And so I suspect whatever rules do come out in July, they're going to be only to the point the SEC has to produce and say what they have to comply with the law. Not because they're gonna be generous or hopeful, because.
They're not done with Dodd-Frank yet, nor are they gonna get
Right,
to
I
that.
mean, this thing's a nightmare, and it'll be interesting to see how it plays out. I don't know.
I was going to comment on top of your comments about raising the money. I mean, if you have an angel round as an entrepreneur, you're trying to raise between $1 million and $5 million, it's kind of below most VCs, and pushing an angel group's investment in it. We're starting to see more of a trend of syndicating regionally, just not only Michigan, but border states and stuff like that, but also with the deal I'm in, I networked at the ACA meeting. I found angel groups around the country that were open to looking at a deal outside their geography, since it was in their sweet spot, and they could take a quick look at it and understand, the threshold, the risk, and the ROI on it. So don't be afraid to start looking for people outside their region, to syndicate a deal, get enough momentum going to close on a larger size round.
I hear there's some cool stuff in Cleveland.
Pardon me?
I think the other point David's alluding to is in that 1 to 5 million, you're actually finding a lot of the smaller, a lot of VC firms will put in a small amount of money, that first or second round. They'll put in a few $100,000 as opposed to millions, just if they really believe in the technology and the opportunity, just to kind of put their stake in the technology in case it does work. So you're finding some VCs that have actually now starting to reverse the trend and actually investing early, but very small amounts. Now, if all of you have been paying attention, one of the things you've been hearing now for the last 5 or 10 minutes, you asked the question, how long does it take us to make a decision? Jack has kind of alluded to how long it takes him to make a decision. David's talking about how long it's taking him to raise $1 million to $3 million. Jerry kind of alluded to how long it may take him. People complain to me that our process takes 30 to 60 days, and I have to tell them, I'm sorry, we're fast. We're fast. So it goes back to a question that came up early on, when's the right time to start talking to investors, and can you be too soon? You got to start early, because plan on, from the day you ask to actually getting a check to put in the bank, that's 6 months.
And I think we had some good clarity on that answer too, was that you have to start planning early for the money, but don't ask for it till you're ready, till you have your documentation, your.
I closed a deal last Wednesday that I've been working on for 4 years.
Yeah.
Did the value go up or down?
Actually went down.
Patience paid off for you.
Yeah. I let all those angels in first.
So is it down round for the Angels?
Well, that was the
Okay,
one.
okay,
we took care of
that's-
that. We-
we'll
we
take
made-
that
we made it
offline.
easy.
Yeah, I was gonna say, don't record that.
Other questions for the group? Yeah.
Kind of on that same topic of multiple rounds, is that something where you're talking about it's multiple rounds and you're always going after a different type of investor? Or is it something where we're talking about, you know, you might invest $3.5 million in a company, but you're gonna start them off at 500,000 and keep increasing it for multiple rounds, and they're always working with typically the same investor?
The way it works is, and you were in the earlier session where I made that comment about we average 5 to 6 rounds per company, and that's what you're referring to. The way the venture capital community usually works is because the types of companies that we invest in are going to take a lot of money. And we may have 2 or 3 players in the first round, and we'll invest, only a small part of our commitment at that point. Then every time we do another round, we all have to pony up and play in that next round. And usually the insiders have to do anywhere from 25 to 30% of the next round. And then we bring in a couple new players. So we're constantly bringing in new players to broaden the pool.
You're talking about other investors that you work with, and you're gonna bring them in?
Yeah.
To your, okay.
Yeah, and sometimes it's other sources too. I've got a company in California that we brought Walgreens in and McKesson as corporate investors in some of the later rounds.
We have a company in the portfolio we've raised over $2 million for in 3 rounds in 18 months, and we're now working with Chemical Bank. And that's part of what I'm asking Andy, is if we put our capital in, how much more can we borrow?
I think we established that.
No, but you said if it came in as common, you could, how do you treat that cash flow
We've been
versus
str-
margin?
This is a deal Ken and I were talking about. This is a deal that a bank generally never even sees. I still view it as a VC deal. So we've been talking about this one and noodling this around since probably January, maybe even before. And as a banker, I'm struggling with it. I can't get my hands around it. And
Explain why.
It's all projection based. We have asked several times, what's needed, and that's been one of the conversations before. And sometimes the answer is, we'll take whatever you'll give us. And I know they will. If I said, we'll approve 500,000, they'll take it and spend it, and in 3 months be back, I need another $1 million. And banks don't like to be that way. They like to know what you need and don't necessarily want you keep coming back unless your projections are going beyond what you thought they would be. So that's been a big issue with us. Collateral has been a big issue with us in this particular deal. There's working capital money that's needed. That number one, they haven't really identified where it's coming from. We've already indicated as a startup venture, we don't want to participate in working capital financing at all because it's the riskiest part of it. We are interested in possibly working on the capital equipment side, and we're working on utilizing USDA as support, MEDC as support, but part of our struggle there is the equipment isn't all located where we can see it, touch it, feel it. Some of it's located someplace else. We've been having a hard time getting a handle on what's gonna be where. What would we finance? What is this equipment potentially worth in a worst case scenario? And so we've been struggling with getting some of those answers, and I think the last meeting we had, I think a company representative, and I think these were with the angel investors that are involved in it, and I think, I wasn't at the meeting, but I know it was articulated, here's what we need to see happen. And I think it went back that additional capital needs to be raised. If it does, then the bank would be, consider funding assets in Michigan as well as support for working capital, provided it's secured by cash.
And while all this is going on, the CEO, who's also the lead engineer, is not working on the business. So, I mean, it's a costly, complicated. Other questions for we've got a great panel here that I want to put to the test, yeah.
I wanted to ask about, you said that you work with Michigan businesses. We are Wisdom businesses, and there is a location in Michigan and in Cleveland, and we are a nationwide business. Would we be eligible to apply?
We require that the headquarters of the company be in Michigan. You can be a Delaware corp, but you gotta, the headquarters has to be in the state, and 51% of your W-2 employees need to be in Michigan.
Okay.
Is that by count or by dollar?
Count.
No,
Head
but,
count.
okay, so here's,
Head count.
you said W-2 employees.
Yeah.
So there actually is no location for the business because it's online,
Mm-hmm.
and then we don't have any W-2 employees, just K-1.
So if you hired one person up here, W-2, then you qualify.
We'll take a look at it. I mean, we're not gonna rule anything out. We always at least take a look and then walk you through. I mean, keep in mind, this is state money. These are indirectly, it's taxpayer money. It's your money. And so you want us to be prudent with how we're gonna invest it. We try to always keep that in the back of our mind too.
Skip, regarding your Spark, I'm from Livingston County, and we're just now starting to talk with you. And looking for organizations that are just like, you seem to be the top dog in that arena.
No, Ken is.
And
We strive to be like Ken.
GLEQ too as well, and working with incubators out of Macomb, and, I'm trying to cover that circuit. So, but it seems like every location has their core organizations or type of businesses that they gravitate to, like Automation Alley or Tech Town, those kind of things in Spark with the meds and, organizations and that kind of thing. Where are you going with Livingston County?
Yeah, this is kind of an aside story and not on topic, but just to answer your question. Spark just entered a contract with Livingston County to do business development, and that contract is we're providing those services for mature businesses, the ones that Andy would finance,
Right.
that are already there and are looking to expand or we're trying to attract to the area or to the state. We're not providing any entrepreneurial services to Livingston County. That wasn't part of the contract. Now, having said that, what you brought up, and this probably applies to you guys and maybe a few others in the room, you may not be geographically close to a smart zone. So where do you go? Well, just get on the map, find the smart zone map and find the one geographically closest to you and start there. Because we do require, as part of our program, again, to keep it efficient, the smart zones do a lot of our due diligence for the pre-seed fund. They do the early work and to confirm and validate that you qualify and that you're at the proper stage, and they'll help you with your business plan before it comes to us.
Skip, can I just follow on to your answer? There's also the new statewide Business Accelerator Fund, which is still being run by the various smart zones, so you need to find a smart zone. But if you find a consultant, if you're located in Detroit and there's somebody up in Traverse City who's the right person to work with you, your local smart zone can help you make that connection, and you can apply to the state fund, and they will pay for that consultant or person to work with your business.
Yeah, being nonprofits, I find across the state, these groups are very, supportive of one another. We refer a lot of business across groups. I don't think the smart zones see themselves in a rivalry in who's going to support getting your submission to SCIP, and so.
Well, I mean, Macomb Incubator, they're good with grants,
Yeah.
working on grants. That's good for my military side. But I work with GLEQ, and my champion is out of Flushing. So he's gravitating me to mid-Michigan. And so, I'm just trying to get the best options I can get.
We had a company out of Flint presented a program we ran for the Oakland University's incubator in Oakland, and we offered them a membership in MMIC because of some specific services we provided. But Flint and Oakland it wasn't like they're not going to be using those guys as well. So I think,
Yeah,
You're on the right path.
Yeah.
Use everybody.
yeah.
Yeah, I don't know whether it's true or not, but I'd heard Andy probably knows the answer to this, that someplace recently I heard somebody's talk that Michigan was #1 in SBA loans. Is that right?
Yeah.
Which just blew me away. I mean, I thought the SBA program was basically gone. So, I wouldn't, downplay that as an option for most of you early on.
Well,
And is it still 90-10 as far as the gear? It's been a long time since I've been in banking. I don't know how the program works. these
Well,
days, but-
there's a number of programs. There's the SBA Guaranteed, and there's SBA 504, which is a kind of a direct lending program for capital assets. But the guarantee program would be more for inventory or working capital, and it's like an 85% guarantee. There's a number of programs. Many people will go to the SBA, think that SBA is lending directly. SBA doesn't. They work through commercial banks generally. They don't have direct lending programs that I'm aware of.
But you still need positive cash flow to pay the loan.
Yeah, sure do.
Otherwise you won't get it.
Well, I'm sorry, we're running out of time. We're going to have another session with this group, and in the parallel room, we're going to be talking about going to market, which helps with that cash flow issue that everybody wants to see. I want to thank our panelists, though. I think we really have a great representation of the resources in the state. And they'll be around for